Neelabha saying, Din, I have issues to understand momentum, like when momentum should happen, when it can slow, etc. Why do we need the momentum? I don't understand. See, I'll tell you what is happening here. We have learned so many things. I don't know how long you have been, into these markets and learning and understanding things. But what happens is we accumulate so much of stuff that is counterproductive to your trading. All right. The one concept is momentum. Now, momentum, when people are discussing about momentum, they sound so intelligent and so distinguished. Now, how will you find out momentum? It's very difficult to figure out when actually there will be momentum. All right. Yeah, absorption of demand like this usually is followed by momentum. But then what happened today? Went in one direction, came back again down. So sustain momentum to find it out beforehand is very, very difficult. Okay. I don't advise that. And that is the reason why, I prefer passive strategy like a credit spread over an active strategy like a debit spread. So what could have been done is, let's say yesterday you establish a credit spread and then you also establish a debit spread. So credit spread gives you that passive profit which you can leverage to establish a debit spread. And here you are in good profit, but today all that profit is lost. Now, if you just stay here, your debit spread is never going to make money, and whatever profit your credit spread was going to give you, it is gone. So I don't like momentum as such, like running after momentum, trying to figure out where there will be momentum. But usually unexpected behavior is what will give you the best momentum, right? So let's say you are expecting the markets to go up, everything is showing up nicely, and market fails, it will fall very, very sharply, all right? So here you are seeing a nice trend, lots of short traders are trapped, lots of complacency is there. When the market reverses, it shows you momentum. So usually when one side is confident, overconfident of a particular thing happening, that is when the opposite activity, if it comes in, it will create a lot of momentum, right? So difficult to keep monitoring. Like what happens is, let's say you're saying that okay, this is absorption of demand, but if it exhausts, then the momentum will be sharp on the inventory adjustment break. But it is not the correct way to look at markets. You have to trust the auction process. You have to trust that yes, this is absorption of supply, okay, and this is, earlier, like if you're treating it as a resistance and market started going sideways, then absorption of supply was unexpected behavior. But after so long of absorption happening, now actually absorption of supply is expected behavior, and exhaustion is unexpected behavior. But it did not play out. We are going higher, and it can still continue to move higher, and on a higher time frame it can still show momentum. So momentum also is time frame dependent. So if you look at yesterday's profile, you can see, if I split this, so not much momentum here, very steady move to the upside, all right? But on a higher time frame, if it continues to develop value area higher, then on a daily chart it will still look like good momentum. If you look at bank nifty, again you can see this move here was momentum, all right? So again, this is intraday momentum. This is not a higher time frame momentum. Higher time frame momentum will take time to develop. It will require multiple days. It will require higher value area placements and continuous move up. If it moves sideways, then higher time frame there will be no momentum, but there was momentum yesterday. So again, it is a time frame dependent concept. So what time frame you are trading from, and what time frame you are looking for momentum to develop will decide whether a particular market development can be called as development, or development of momentum in the market or not. All right. Nirva Singh SDN, I got it, but today I was long 44 400 with hedge. I thought HVN should defend, so I chose that strike. I have gone for 15 minutes, then I was in big loss. I know market is accepting as day range with failed auction, but I thought higher time frame buying will defend that HVN because of breakout. I fail to recognize momentum. No, 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 no. Again, no, you are not understanding it correctly. Forget about momentum. Uh, 44 400. So you are looking at this. Okay. Now again, see, there is a very basic difference between references. They are also time frame dependent. So shorter time frame and higher time frame. Where is the higher time frame reference here? This is not higher time frame reference. Shorter time frame reference will not be defended by higher time frame participants. Why would they do that? Because let's say now the market fails and market comes lower, all the shorter time frame buyers are trapped. Why would they defend it? They can, if you know, let's say, let us go to the higher time frame. I'll show you what exactly I mean. This is the developing HPN. This is the higher time frame reference. Okay, what is this? This is 43817. Well, let us go to this chart and 43800. Let us plot this. Okay, so 43800. So it's roughly coinciding with this composite HVM. Okay, fine. So this is your higher time frame HVN. Make sense? This is your shorter time frame HVN. Shorter time frame HVN, as soon as you see a failed auction happening here and then IB range extension happening here, your shorter time frame HVN is under threat. So if you have bought here and this is happening, you have to get out. This is your shorter time frame failure. Why? Because if trade facilitation has to maintain in the direction of your trade and shorter time frame HVN has to be defended, you don't need IB range extension happening to the downside. You don't need range extension happening to the downside. Forget about momentum. There is no momentum involved here. Momentum, as it applies to traditional technical analysis, is not a very good concept to go after. Okay, I have a book. I'll show you. So nothing against this guy. This guy is very good. He has been, I have referred to this book back in the day so many times. I don't read it anymore. It does not work like that. Okay, so now I know the difference between time frames. I know that shorter time frame HVN is HTF has nothing to do with this. They will be happy that this is broken, this is broken, this is broken, this single pin, everything is repaired. Market comes here, you are highly bearish, and then it goes back up. Why? Because that is when these guys will get all this inventory at a lower price. Make sense? So that is what is happening here. If you are taking trade based on this, I have no problems with that. That is good. And even in the morning update, I also said that this should be defended by traders if the buyers have to remain in control on the shorter time frame. Now, as soon as this happens, IB range extension to the downside, you are out of this. You should not stay in this trade because it is not behaving as expected. This is unexpected behavior. Then you get out. And then what happens? Market goes lower. So if you had held on to this, you would have made much bigger loss. But if you got out here, you might have not made as big a loss or break even or whatever. So again, don't confuse time frames. If you want to trade from higher time frame, this does not concern you. If you are trading from shorter time frame, then you cannot expect higher time frame to defend it for you. They won't do it. They won't do it. You cannot seek help from higher time frame. They are trading against you. Make sense? So if the shorter time frame actions are not supporting your hypothesis, you have to get out of that trade.